By the time you reach the end of this video, hundreds more people around the world will have quietly crossed into millionaire territory. Over the past decades, the number of millionaires has grown dramatically. In fact, according to the UBS Global Wealth Report, there are now roughly 4 times as many millionaires as there were in the early 2000s. That raises an important question. Where exactly are all these new millionaires coming from? Which industries are driving this growth? And perhaps more importantly, what do they all seem to have in common? That's exactly what we're going to explore today. We'll walk through the key industries that have been consistently producing millionaires in recent years and try to understand the forces behind them. Let's start with the big picture. In 2024 alone, nearly 684,000 people reached millionaire status. That's roughly 2,000 new millionaires every single day. The United States continues to lead globally, adding more than 379,000 millionaires in just 1 year, accounting for over half of the total worldwide increase. What's even more interesting is how quickly emerging markets are catching up. In India, for example, around 40,000 people became millionaires within a single year. That's 1 new millionaire every 15 minutes. In some areas, entire neighborhoods have transitioned from middle income to millionaire status in under a decade. China also continues to generate more millionaires than any country outside of the US. However, this growth isn't evenly distributed. Some countries are actually seeing the opposite trend. The UK and Japan, for instance, experienced a decline in their millionaire populations last year. In many cases, this was driven by capital outflows or the weakening of local currencies against the US dollar, which reduced overall wealth when measured globally. So while global wealth is clearly expanding, it's not being shared equally across regions. And this is where things get really interesting. The majority of new wealth isn't coming from everywhere. It's concentrated in a relatively small number of industries. These sectors are doing most of the heavy lifting when it comes to creating millionaires. So which industries are responsible? And why do they continue to generate wealth year after year, even across different economic cycles? Before we continue, let me take a moment to share what this channel is about. A kid's dream is built around a simple idea, understanding how money and the world around it actually work, and how ordinary people can navigate that system to build something meaningful over time. On this channel, we explore topics like wealth creation, global career paths, economic trends, and the underlying systems that shape financial outcomes. Everything is approached with a long-term, grounded perspective that focuses on clarity and real-world application. The purpose here is to give you a clear view of the bigger picture so you can make more informed decisions, position yourself more effectively, and steadily move toward the life you want. If this way of thinking resonates with you, you're in the right place. Now, let's get back to the main topic: why certain industries consistently produce millionaires. We'll start with one of the most well-known: real estate. According to the UBS Global Wealth Report 2025, real estate continues to be the largest single asset class among high net worth individuals, with nearly 27% of their total wealth allocated to property. But beyond that headline figure, what really matters is how everyday individuals are able to reach the $1 million mark through real estate. In the United States, data from the National Association of Realtors shows that successful agents and small brokerage owners frequently build millionaire-level wealth through commissions alone. At the same time, in high-growth markets like Dubai and Manila, property prices rose by 44% and 21% between 2019 and 2023, creating tens of thousands of new millionaires locally. The core mechanism behind this is actually quite simple: leverage. With just a down payment, you gain control over an asset that is significantly larger than your initial cash investment. If the value of that property increases over time, the equity you accumulate can grow rapidly, almost like a snowball effect. Take a simple example at an individual level. Someone buys a small apartment with a 30% down payment. They rent it out, let the tenant cover most of the mortgage, and hold it for a few years. The property appreciates, the loan gets paid down, and suddenly, their net worth grows far beyond the cash they originally put in. That's how real estate quietly turns ordinary income into long-term wealth. For disciplined investors, even a small portfolio of rental properties or a handful of successful house flips can be enough to reach millionaire status within less than a decade. This pattern isn't limited to developed markets. In India, a report by Knight Frank found that nearly 20% of newly created millionaires over the past 5 years identified real estate as their primary source of wealth. In fast-growing economies, even relatively modest projects, such as small apartment buildings or commercial spaces, can generate life-changing financial outcomes. So while real estate may not produce billionaires overnight, it consistently helps hundreds of thousands of people build significant wealth each year. It's relatively accessible, easy to understand, and in the right market conditions, it remains one of the most powerful ways to scale personal wealth over time. Another major area to look at is healthcare and medical services. According to Oxfam's Pandemic Wealth Report, more than 40 new healthcare billionaires emerged during the COVID period. But beyond billionaires, what's even more notable is the surge of new millionaires across pharmaceuticals, clinics, and medical technology. In India, for example, the generic drug industry has become a powerful wealth engine. The country supplies over 20% of the world's generic medicines, and many mid-sized manufacturers and distributors saw their wealth grow significantly during the pandemic-driven demand. This trend is reflected in broader data as well. A Knight Frank survey shows that an increasing number of India's newly minted millionaires point to healthcare and pharmaceuticals as their primary source of wealth. In the United States, a different dynamic is playing out. Private equity firms have been acquiring and consolidating dental practices and outpatient clinics, allowing many doctors to exit their businesses as multi-million-dollar owners. At the same time, the medtech sector has experienced rapid growth. As company valuations surged, stock-based compensation turned many employees into millionaires. Even behind the scenes, wealth is being created. Suppliers producing components for medical devices, such as scanners or pumps, have quietly built significant fortunes without much public attention. What makes healthcare particularly unique is the nature of its demand. Unlike many industries, it doesn't fluctuate heavily with economic cycles. People will always need medication, diagnostics, and treatment. This consistent demand makes the sector less volatile than tech, while still being a reliable generator of wealth over time. From generic drug production in India to clinic consolidations in the US, healthcare continues to steadily create new millionaires year after year. Now, shifting gears to fashion and retail, this is another industry that has consistently produced new millionaires, especially over the past 5 years. Consumer demand is virtually limitless, and the rise of the internet has made it easier than ever for individuals to enter the market. According to Shopify's 2020 for Impact report, more than 5 million merchants are currently operating on its platform. Among them, thousands have reached 7-figure annual revenues. A similar pattern can be seen on Amazon. Marketplace Polls estimates that in the US alone, over 60,000 Amazon sellers generate more than $1 million per year. That said, retail, especially e-commerce, is far from easy. Most dropshipping businesses, direct-to-consumer brands, and online stores ultimately fail. However, because the barrier to entry is relatively low and such a large number of people are participating, even a small percentage of success translates into tens of thousands of new millionaires. So it's not necessarily that e-commerce is an exceptionally strong strategy on its own. Rather, it's the sheer volume of attempts that continuously produces successful outcomes. And when everything aligns, particularly with strong profit margins, some brands are able to scale to $5 million, $10 million, or even $20 million in annual revenue. Let's shift our focus for a moment to manufacturing and supply chains, an area that often flies under the radar but plays a huge role in wealth creation. Over the past decade, manufacturing has actually produced more new billionaires than any other industry. And it's not always the big, well-known brands. Think about packaging companies supporting Amazon sellers, furniture manufacturers supplying IKEA, or textile producers working with platforms like Shine. These businesses are all part of the supply chain, and many of them have quietly crossed into 7-figure wealth simply by owning a specific piece of the production process. Now, manufacturing margins might not seem exciting at first glance. But once a business reaches scale, profits can grow very quickly. That's where the real opportunity lies. In many cases, it's the contract manufacturers, specialized suppliers, and industrial intermediaries who are building significant wealth, often without much public recognition. A great example comes from China. The rapid growth of the electric vehicle industry didn't just benefit companies like Tesla, but also created a wave of millionaires among those producing batteries, wiring systems, and key components. In Germany, there's even a term for this kind of business structure, Mittelstand. These are typically small to mid-sized, family-owned companies that dominate highly specialized niche markets. They might be producing something as specific as precision screws or industrial pumps, products that don't sound glamorous, but are absolutely essential. And because of that, they hold strong positions in their markets. This idea isn't new. If you look back at the California gold rush, the people who built lasting wealth were often not the ones searching for gold, but those supplying the tools and services around it. Levi Strauss made money selling durable clothing. Samuel Brannan sold tools and equipment. Even boarding house owners profited by charging high rents to miners. In many ways, the ecosystem surrounding the gold turned out to be more profitable and reliable than gold mining itself. And that same pattern still applies today. Many modern millionaires are not necessarily the ones chasing the trend, but the ones providing the infrastructure behind it, the picks and shovels of today's industries. Now, moving on to finance and investments. If there's one industry that consistently produces new millionaires year after year, it's finance. And we're not just talking about the headline-grabbing hedge fund billionaires. There are thousands of professionals across the industry, bankers, traders, private equity partners, and venture capitalists, who reach millionaire status through a combination of bonuses, profit sharing, and equity ownership. At firms like Goldman Sachs, Blackstone, or KKR, it's quite common for senior leaders and even mid-level executives to earn multi-million-dollar compensation packages. In fact, for those who stay and perform at the top level, becoming a millionaire after 1 or 2 decades is often seen as a natural outcome of the career path. When you're managing billions of dollars, even a small percentage of returns can translate into a very large personal income. Of course, finance does come with a significant barrier to entry. It's not an industry that everyone can easily step into. You can't simply walk into a top firm and expect to manage large funds without the right background, track record, and network. That said, for those who do manage to enter and succeed in the field, the likelihood of reaching millionaire status is higher than in most other industries. And finally, we have to talk about technology and startups. If there's one industry that clearly stands out when it comes to creating new millionaires, it's tech. It doesn't just produce a large share of the world's billionaires. It's also the leading pathway for first-generation millionaires, meaning everyday individuals reaching 7-figure wealth for the first time. According to data from UBS and Forbes, the technology sector accounts for more than 20% of all billionaires globally. More importantly, over the past decade, it has generated tens of thousands of new millionaires through IPOs, company acquisitions, and stock-based compensation. A well-known example is Airbnb. When the company went public in 2020, it instantly turned hundreds of employees into millionaires, many of whom had only been with the company for a few years. Similar patterns can be seen with companies like Stripe, Canva, and Uber, all of which created waves of wealth for early employees and investors. More recently, the rise of artificial intelligence has continued this trend. Nvidia is a great case in point, as its stock price surged more than 200% within 18 months. It significantly increased the wealth of not only its CEO, Jensen Huang, but also thousands of engineers, managers, and early shareholders who crossed into millionaire territory. One of the key drivers behind this is equity-based compensation. Stock options allow employees at all levels, not just founders, to benefit directly from a company's growth. As the business scales, so does their personal wealth. What really sets tech apart, however, is its speed and scalability. A direct-to-consumer brand might need a decade to reach $100 million in revenue, while a successful software product or app can achieve that in just a couple of years. This acceleration dramatically shortens the path to becoming a millionaire. In fact, it's quite common to see individuals in their early 30s reach that milestone within the tech industry. And that's something rarely seen elsewhere, which is why technology continues to hold the top spot when it comes to wealth creation. Now, here's something worth thinking about. If you look across all these industries, you'll start to notice a clear pattern. Millionaires tend to emerge in environments where 3 key factors come together at the same time. The first is scale, the ability to reach a large audience, not just a small group of customers. Think about a Shopify store tapping into Amazon's massive ecosystem, a tech platform serving users across the globe, or a factory supplying components to international markets. These models operate on a level far beyond what any individual could achieve alone. The second factor is leverage. This means using systems and resources that go beyond your own time and effort. In real estate, that might be financing through mortgages. In finance, it's managing other people's capital. In technology, it's software and infrastructure. In manufacturing, it's machinery and supply chains. Leverage allows you to increase output without needing to increase effort at the same rate. The third piece is growth, being part of a larger trend that's already expanding. This could be the rise of electric vehicles, the rapid development of AI, aging populations, or increasing demand for luxury goods in emerging markets. When you're positioned within a growing industry, that momentum works in your favor. And this is exactly why the same industries continue to produce millionaires year after year. They sit right at the intersection of scale, leverage, and growth. It's about placing yourself within the right system. Because when a system combines all three elements, scale, leverage, and growth, even a relatively small role within it can significantly increase your chances of reaching seven-figure wealth. At the end of the day, becoming a millionaire isn't a matter of luck. It's the result of being in the right environment, with the right structure in place. Are you standing in the right place when the system starts to move? Thanks for watching, and I'll see you in the next one.